Hello and welcome to the Weekend Investing Daily Bite of 29th November. We have ended the month without a major damage this month. The month line is almost flat. Although in the last couple of days, we've certainly had a lot of yo-yo in the markets. Markets beautifully closed the gap that was created a couple of days back and has retraced upwards. Now let's see where we have to go. Uh, Today, we are going to show you a part of the second part of the video with some data that may be too good to be true if you see it. So we'll keep it for that uh, release. We've also launched a portfolio momentum report, a free health checkup where you can upload your stocks and the quantities of your stocks, and the report will give out a momentum score, and you can then benchmark it against different portfolios. You can scan this QR code or go to the description and use the momentum score and weighted skew output of this report. Please do read the disclaimers and subscribe to the channel if you haven't so far, and click on the bell notification. So here you see Nifty up 0.91% today. You can see after 3 days of consolidation in this very narrow range here, markets yesterday on expiry day games, I would say, came down, exactly closed this gap that was there, and has bounced back to nearly the same range as where we were. So we are again back above 24,000 and playing there. So break of this top here is actually going to be the biggest trigger going forward. We are still far from that, and break of this yesterday's low probably is a short-term signal that we are going to retest this bottom again. So that's where we are on the Nifty, 0.91% up. If you see, we have not net gained anything since July. So almost 5 months have gone by, and we are still at the same level. We went forward, we came back, and now we are where we were beginning of July. So this is sort of a time correction and consolidation that is happening in the market. You can see here that in the last 1 month also, from third week of October till today, there is no net loss or gain. So market is playing around this part for now, because if there is severe bearishness, probably we would be much lower by now. So that doesn't seem to be the case as of now. Nifty Junior moving ahead, 0.67% up. You can see it's a very different chart from Nifty. There was no closing of the gap here. In fact, has been going up, up, up. Also largely because Adani stocks have recovered and Nifty Junior has good weightages of Adani. It is now coming close to some resistance point here as well. Nifty mid cap, very tepid, very small range. Last 4 or 5 sessions, gradually inching up at 0.32%. Again, no gap close here. So this is telling me that when gaps don't get closed easily, which have been made few days back, that in the very short term, the market is looking stronger than weaker. Of course, on Nifty, it's a different scenario because FIIs are predominantly selling on Nifty stocks. And you can see it very clearly here that small caps up 0.79% have actually breached this particular average that we have been seeing, and they have been up on the trot for like 4 or 5 sessions now, despite the larger index not moving at all. So this is giving you the breadth of the market, that the breadth of the market is probably more bullish than the Nifty stocks that are there. And at 17,700, you are a stone's throw away from the all-time highs at 18,600 or something like that, less than 5% from an all-time high on small cap index. Nifty Bank was very, very tepid. Again, within this range, did not close this gap, is above the average, is within this major consolidation zone. So very near this breakout point also. So 0.29%. It's a good end to this week. The week started with a huge gap up. Most indices are above from where they started the week. Momentum trends for the CNX 500 stocks looks good. 334 advances, 258 declines. FIs came back with a vengeance to sell yesterday. 11,700 crores of sales. DIIs tried to match, but 8,700 crores was much lesser in terms of the buy. So you really can't say that FIs have stopped selling. Heat map today, few stocks that have supported the index largely is Bharti Airtel, Sun Pharma, L&T, Reliance, ICICI Bank to some extent, Bajaj Finance. and Cipla. These were some of the stocks up, along with Mahindra and Ultra Semco. There was no major loser as such. Power Grid losing 1.2%, but really a flat or an up day. In terms of the Nifty Next 50, you had LIC moving up dramatically at 5%. I think after a long time, we are seeing this kind of move on LIC. Siemens continuing to rally, posted good results. Divi's Lab, Torrent Pharma, Zydus Lab. So pharma actually was moving very rapidly today. You could see it in two ways, that pharma is either trying to take the leadership position now in the sectoral moves, or we are moving more towards defensives as of now. Adani Green and Adani Ensol moved up 21% and 15%. So the investors in Adani stocks probably have recovered all losses. In some cases, they have gone much beyond from where the fall started. Zomato down, VBL down, NHPC down, Lodha, Chola Finance, IRFC. These were some of the stocks that were down. You can see very nicely Ambuja Cements and Shree Cements cement stocks also picking up quite good. Sectoral trends: pharma, as I mentioned, up 2.4%, so taking a huge lead today. Commodities up 1.5%, infra up 1.5%, energy up 1.4%. So all the sectors that were not doing well in the last month or so are picking up now. Autos also picking up 1%, and real estate and PSU banks taking a back seat today. So it's a very good churning that is happening in the market. Especially I would say energy stocks and commodity stocks, which were quite beaten in the last 3 months. They are trying to stage a comeback, and this churn of sectors can probably give new leadership to the market. I think it is possible that the month of December may be positive for Nifty. We've closed month of November on a flattish zone, and you can see here that after consolidating on the pharma index, I'm sorry about the spelling here, uh, one can see that it is about to sort of make a mini breakout and go higher on the pharma index. Torrent Pharma, Divi's Lab, Alchem, Ajanta Pharma all doing quite well today. The second rung pharma stocks actually doing much better. Stock spotlight is on Adani Green, so huge run up from recent 840, 850 kind of bottom, 21.8% today itself. So yesterday it was very clear as it was closing near the 2-day high that a further move can come up, and from 1100 straight down to 1323 on that front. So let's now come to the data that may be too good to be true. Last 10 years, let's compare Nifty and INR gold. Which one do you think would have done well? A lot of folks, if they were to be polled, will vouch for Nifty 50 because there is a systematic, uh, I would say, a systematic narrative that is built against gold by a lot of equity folks. I am also in the equity markets, but I think all asset classes are important in our portfolio. So the returns in the last 10 years, and I'm talking about 10 years because 10 years is a reasonably long time. Of course, if you time it in such a fashion, you could also have some periods where Nifty has done better. There's no question about that. But a lot of folks will be surprised by this data that in the last 10 years, gold in INR terms is up 204%. And Nifty is also close by at 182%. Maybe if you add the dividends, it will get very near. So the issue is that we are consistently creating the narrative that everything else is bad, equity is the only place to be, whereas there are other asset classes that are also doing well. And you can see it very clearly in this chart itself. Whenever Nifty, the white line, is not doing so well, gold is doing well. Whenever Nifty, like COVID crashed, Nifty went down dramatically, gold went up dramatically. So there will be many instances where Nifty will not perform and gold will perform. So it will give you a great hedge for your portfolio. Of course, gold does not compete with Nifty in terms of long-term returns. I'll admit that, but that is not the purpose of gold. The purpose of gold is to provide a insurance hedge for your INR-based portfolio, and your equity portfolio is one of that asset. So, despite being a hedge, despite being just an insurance, it is also at times giving you fantastic returns. I mean, what more can one ask for in terms of that? Gold USD is also doing quite well. It has resisted at this trend line and is about to sort of break higher here. Uh, you know, the returns on gold in the last 5-10 years have dramatically changed the view on gold for a lot of folks. A lot of central banks are continuously adding gold to their portfolios. to the reserves. So this is the RBI net purchase and reserves chart. You can see how the gold reserves for RBI after 2016 have started to go up, and every year they are purchasing 70, 80, 100 tons kind of a, and they've also repatriated gold back from overseas vaults. So the primary reasons for gold surge is demand for gold remains very strong. Wedding season, Diwali season, that's on. Impact of duty cuts. So gold import duties were at 15% to dissuade uh, people spending dollars for gold. But then a lot of smuggling started to happen, and government realized that having this 15% differential between gold price in India and gold price abroad was causing gold to come in through other routes. So they slashed that 15% duty to 6%, and that has created this or removed this arbitrage that was available, and hence people are wanting to buy gold in the regular format only. And the black market activity and all those things have come. The hallmarking has improved in jewelry. People are investing in gold as investments and not just jewelry. And sovereign gold bonds, which have been on since 2015, government finally realized that it is very high cost of funds for them. I mean, they are paying 12, 13% CAGR for gold returns, then they're paying 2.5% additional interest on it. So it is tending to be 15% plus cost of capital for government to raise these bonds, and that is stupidity if you are able to get money at 8 or 9% or 7%. So government has probably finally decided to not drive further this sovereign gold bond scheme. Whoever has it. The uh, the secondary market for the government gold sovereign bond is on, but most of the times the bonds now are priced higher than fair price. There was a time, a year and a half back, when all these bonds were available at a discount, and we made several videos on that. Some people were intelligent enough to listen to us and go for it. Uh, Gold imports also have surged since the duty cuts. You can see the kind of surge that is happening, almost doubling of gold imports here. And gold ETFs have taken off in a gold ETFs. Newer players, newer AMCs are coming in, and 1960 crores was just the October 2024 trend into ETFs, and 12.2 tons have been added to the gold ETFs. Uh, Gold ETF fund flow also you can track here. Total holdings, the way it is going. Monthly gold ETF flows have, you can see in the last 3 4 months, have really picked up very strongly, and overall holdings are continuing to rally. uh, Titan, PNG Jewelers, all are increasing, are seeing increased sales. There's shift of buying behavior amongst investors. So this diversification, hedging, insurance, whatever you may call it. So the coins and bars part of the market is picking up more than jewelry, and people have understood the value of allocating to gold over just having just equity in their portfolio. So this asset allocation, I think one can give credit to a lot of influencers also, and a lot of YouTube and social media uh, education, that people are now finally coming around to the idea that asset allocation is a meaningful concept, and the fact that all eggs should not be in one basket. um, we live in a very dynamically changing world with all kinds of wars and all kinds of trade wars that are happening. So anytime anything can happen, you need to have tangible assets also, and gold and real estate are those tangible assets that you can hold on to. So this is where the entire move has started, and I think it is just the starting of the move, because globally investors are allocated less than 1% to gold, and if that 1% becomes 2% or 3% in the next many years, I don't know where the gold price can really go. So do mention in the comment section, what is your percentage gold allocation, what is your view towards gold, how do you see gold versus equity in terms of its hedging and insurance qualities, and would you recommend others to buy gold? This is all I have for today. Thank you so much for watching these daily bites. Do like and share these videos, and do subscribe to the channel if you haven't. Thanks. Bye.